All right. Good morning, everybody. Welcome to another live session here on both Facebook and over on our YouTube channel. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with everybody. Hopefully everyone is doing well. If you guys can hear me out there, make sure to let me know down in the comments over on our Facebook channel or over in the chat there on our YouTube. Hey there, Mark. Good morning. Jockey Club in the house. Good to see you. Hopefully you're doing well. Hopefully you guys had a good Jockey Club this morning. Hey, hopefully you guys are all doing well over there. Over on Facebook, if you guys can hear me, just let me know down in the comments below. Let me know that you guys can see everything. Everything's coming through clear. The audio is coming through good for you guys. Just want to make sure you guys have a good user experience as well. But welcome everybody. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Today is our Thursday mobile streams where we're going to be looking at the VectorVest Stock Advisory app. If you're not familiar with it, the VectorVest Stock Advisory app is probably the most comprehensive stock trading app out there. It allows you to manage your portfolio, know when to get in, when to get out of the market, what stocks are hot, what stocks are not, and everything else you need to know. Hey there, Alessandro. Good morning. Hopefully you're doing well. RJ can hear you fine. Thank you for that. Facebook is good. Awesome. Thank you, guys. Good morning, Jay, RJ, Sin City. Hopefully you guys are all doing well. Welcome, everybody. So today we're going to be showing you how easy it is utilizing the VectorVest Stock Advisory app to find the right stocks for you. So before we jump into it, though, as always, just to give everybody a little feel for what we do, first and foremost, we'll take a look at what's going on in the market here today. Secondly, we'll then jump into our topic of discussion. And then finally, we'll save the best for last, where we'll analyze any stock that you want to take a look at in less than 10 seconds. So as always, if you enjoyed today's stream, make sure to hit that like button, subscribe to the page if you're not already subscribed, and let's jump right into it here today. All right. Karen, first time joining, welcome. Hopefully you guys are doing well. Good morning, Sunny, Mike, Daryl, Dan, Drew, Michael, Jay, once again, Alessandro. Hopefully you guys are all doing well. Maureen, welcome, tuning in from New York. Hopefully you guys are staying warm. Hopefully it's not too cold up there yet this time of year. All right, so with that, let's go ahead, take a look at what's going on here today. So right now we have one tick into the green. Therefore, the market is mildly bullish, and VectorVest advocates caution when buying stocks at this time. As always, we go scroll down to take a look at the color guard, and the color guard analyzes the overall trends of the market utilizing three key components. So the first and foremost is the price, which is looking at the price of the VectorVest composite. The price of VectorVest composite is an arithmetic indexed average of about 8,800 stocks that we currently track here in the US market. And we feel this gives us a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,800 stocks as a whole. Second is RT, or relative timing. Now, the relative timing is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2 to keep it easy for you out there. So anything above 1 would show that the short-term trend of the market is up. Below 1, short-term trend of the market is down. As we can see at 0.98, the short-term trend in the market is slightly lower currently. And then third, the buy to sell ratio. So every single day, VectorVest gives a buy, hold, or sell rating on every single stock that we track. We use a systematic approach and not just an emotional approach. And we look at the buys and compare them to the sells to get an idea on the overall market health. So if there's more buys and sells, the buy to sell ratio would be above 1, as it is now at 1.09, and that indicates overall market strength. So the trends of these three indicators are comprised to come up with an idea of what the underlying trend is looking like, and that's what we look at when we look at the MTI. So the MTI is going to be cast on a scale of 0 to 2, and above 1 shows the underlying trend of the market is up, and below 1 would show us that the underlying trend of the market is down. So at 1.13, we can see that the underlying trend of the market is back to up, pulling back a little bit, but up overall on the underlying basis. And then the next column is the trend column, which shows two parts of the trend each and every day. Now, the first part is looking at what we like to call the primary wave, which is simply showing the short-term or weekly trend of the market. As we can see, it is down since we're lower on a week-to-week basis. So we're lower 5 trading days ago, or we're lower than what we were 5 trading days earlier. Second part, just simply reiterating the MTI, and since the MTI is above the level of 1, the underlying trend, or the second part of that trend column, will obviously be up. And then last column here is our calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. As we can see, we still remain in that confirmed up situation as of today. Now, as always, we do like to take a look at the advanced declines, because the advanced declines can help us get a good sense of whether or not today would be a good day to buy or not a good day to buy. When we look at the advanced declines, what we want to see is a 2-to-1 ratio. So if the market's moving higher, we want to see twice as many stocks advancing than declining, and just the inverse if the market was moving lower. So right now we can see we're sitting at about 63% of stocks moving higher and about 26% of stocks moving lower, meeting that 2-to-1 ratio we like to see. Therefore, if we need to be buying a position today, we may be able to do so based off what we see so far. And then taking a look at the major indices, the Dow's up about 0.5%, NASDAQ's up about 1%, S&P's up about 0.8%. Overall, the VectorVest composite up about 0.9% here. So let me make sure I get all questions covered here. Talking about the Jockey Club there. All right, cool. Been with VectorVest for 3 weeks and now up almost 7% since joining. Awesome. Glad to hear that, Lewis. And let's keep it going. Let's keep the strong performance up and moving in the right direction. Good morning, Mark. Good morning, Patrick. I like that name. All right. So we see the markets are up. We see we have twice as many stocks advancing and declining. Things are looking pretty good. So therefore, right now, if we need to be buying a stock, today may be a day that we could potentially do so. But today we're going to be taking a look at what stocks to buy based on your own personal preference. So as always, VectorVest categorizes 4 main styles of investing to really cover anybody out there. They go from speculative, which is somebody who doesn't care about fundamentals, somebody just trying to chase the hottest trends, to aggressive, stocks that have good long-term potential, but also require a lot of risk involved with those. Then we have more prudent stocks, which are looking at stocks that have good long-term potential and less risk involved with them, which is what typically VectorVest advocates for. And then the last category, we have conservative, which is looking for more just simply focused on safety, considering like dividend stocks, things that pay a dividend. Price doesn't really fluctuate too much, but they pay a decent dividend, and that's what you're really looking for with that. Appreciate that, Jay. I appreciate that. Paid for my VectorVest sub for the year. Awesome. Glad to hear that. I love hearing when you guys jump on board of the trades, take advantage of them, and making money with them. Especially when that one trade, just single trade, paid for the whole subscription for the year. So, A-okay with that one. All right, Steven. So if you want to take a look, we can take a look at GE in a little bit. As always, stick around till the very end. We'll analyze any stock that you guys want to take a look at in less than 10 seconds. So make sure if you want to see your own stocks analyzed, stick around towards the very end, and we'll get to those in a little bit. All right, so VectorVest makes it really easy. That's what VectorVest is really for. It's designed to make your investing simpler, faster, and easier than anywhere else out there. And what I'm going to show you here today is going to do just that. So what we're looking for is stocks that meet our specific risk tolerance. As we just talked about, the speculative, aggressive, conservative, and prudent categories. Well, VectorVest is your one-stop shop to find exactly those types of stocks. So if we come down here, what we're going to do is take a look at the screeners here today. Typically, we look at a lot of the watch lists, the premium watch lists specifically, but we're going to take a little time and spend some time in the featured screens because it's a really easy spot to go to that gets overlooked quite a lot. We want to make sure everybody's aware of this and able to find the stocks that meets their specific style of investing. So as we just talked about, there's 4 main styles of investing. And what do we see here towards the very top? Prudent stocks, conservative stocks, aggressive stocks. So no matter what type of investor you are, you can find the stocks that meet your criteria right here for you. Let's see. Making sure I don't miss anything. Should prudent investors, Siddharth is asking, should prudent investors look for undervalued stocks? Prudent investors, undervalued is definitely a bonus, but it's not a make or break situation because even stocks that are hot, they can be prudent stocks. And if they're steadily going up and you have a steady rise in price, you can make money on them. So, if they're overvalued, just keep that in mind that they are overvalued and make sure to adjust your plan appropriately for that. So Mark, I'm going off an old number. Apparently it's closer to 90 or 9,000 rather than 8,800. Let me just verify that real quick. Yeah. So 9,054 stocks is what we track in the VectorVest composite. So way more than what I was saying earlier. Sorry for misspeaking. I was going off of an old number from, I guess, a few weeks ago. That's why. It's great seeing the stocks continuing to grow here. The VectorVest composite continuing to grow, because that shows that we're doing what our subscribers and our users want us to be doing, and that is adding stocks that you guys are interested in. As we say time and time again, if there's ever a stock that we don't track in the database, it's not because we don't want to, it may be just because we didn't realize it was a stock that, had somebody interested in it. So you can always send us an email to angieh@vectorvest.com, and we add new symbols about once a week, every Thursday typically. And so therefore we can see we're actually getting those symbols in there for you guys. All right, 9,054 is the number today. Yeah, I stand corrected with that. All right, so let's go ahead and start off with the Prudent stocks here today. Shiba, I'm not gonna get into I'm not going to talk about cryptos here today because, we don't track the crypto exchanges. We track crypto stocks, but not the crypto exchanges. And I'm going to leave my own personal thoughts on Shiba for later time. All right. So starting off with Prudent stocks. If you want to take a look at what a Prudent stock is, we can see the criteria from the upper left, and it tells us the screening criteria, prudent temperament, price and volume, 100,000 by 100 or 1 by 100,000. So price greater than $1, volume greater than 100,000, no contra ETFs, and really looking for stocks with an RV and an RS greater than 1. But we'll talk about those indicators in just a second and what they mean for you. So let's go back, take a look at the stocks. Apps coming up is number 1. We'll start off on this, work our way through this specific example, and then move on from there and take a look at some of the others we have for you as well. So as always, when you tap on a stock, you see the basic quick snapshot of a 1-year graph at the very top, and then you get 4 indicators right there below there. So those 4 indicators are all going to be cast on a scale of 0 to 2. Once again, to make it easy for you, we want to help simplify your investing and not complicate it. So therefore, 0 to 2 scaling tends to work great for a lot of people. All right, so the first one we're looking at is RV or relative value. Now, this is looking at the 1 to 3 year long-term potential of the stock compared to a AAA corporate bond or a relatively safe investment. So at 1.86, we can see that apps is expected to outperform that AAA corporate bond by quite a lot over the next 1 to 3 years. The next indicator we look at is the RS or relative safety. Now, to give the long definition of it, it's looking at the consistency and the predictability of a company's financial performance. In essence, if a company is growing their earnings and beating earnings quarter after quarter, year after year, and able to do that consistently, the higher the RS rating will be. Well, another way of keeping it, or to keep it simple and remember it, it's just simply an indicator of risk. So above 1 tells us that there's less risk involved with the stock, and below 1 would tell us that there's more risk involved with the stock. So with apps at 1.27, clearly shows that there's less risk involved with this stock compared to the average stock out there. And then the third indicator is the RT or relative timing. Now the relative timing is looking at the short-term price trend of a stock, and anything above 1 shows that the short-term trend is up. Below 1 would show us that the short-term trend is down. The great thing about RT though is it not just indicates a direction, whether it be up or down, but it also indicates the magnitude of that direction or that move as well. So if it's above 1, the closer to 2 it is, the stronger the uptrend. Below 1, the closer to 0 it is, the stronger the downtrend. So if you're a momentum trader, RT is going to be your primary focus. And actually, once you own a stock and you hold it in your portfolio, RT becomes the most important indicator you need to pay attention to. So looking at apps, we can see the RT is at 1.78, telling us it's an extremely strong short-term uptrend. And then these 3 indicators are comprised to come up with the VST, standing for value, safety, and timing. This is something unique you're not going to be able to find anywhere else. And the VST is unique in the sense that it takes a look at both fundamental and technical analysis and wraps it up all into one to make it easy for you to get a great overall picture of the stock in a matter of seconds. So at 1.66, the stock is definitely looking pretty solid. It is going to be favorable. Therefore, as we saw in the upper left, the stock has a buy rating right now. The stock's moving higher, and everything looks pretty good on this. Now, if you want to find more information on this stock, as always, you can get the extended data right down here below, where you can find earnings information, dividend information for more conservative plays, sales information, and everything that you would need to know to make an informed decision on that stock. ETF include leverage should be interesting. ETF on including leverage, not sure what you're referring to there, but yeah, ETFs leverage ETFs are a great way to make money. What is the stop number 17 less than the price? Jonathan, great question. So that stop number in the upper right hand corner for apps, the price currently is 89.30. The stop price is 72.09. So what you're looking at here, that stop price is a final line in the sand. It's not stating this is where you need to put your stop at. It's stating this is where, if you're still holding on to it by the time it hits that point, you either need to sell now or hold at your own risk. Most likely you'll be out well before that point, but it's basically like a final alert or final notice. If you went away for a couple of weeks, came back and you saw your stock below that stop price, then that's kind of giving you a heads up saying, hey, I need to reevaluate my position and ask yourself, are the reasons you purchased that stock still true today? If yes, you may still hold on to it. If no, then the answer is clear what you need to be doing. Now, the stop price is based upon a 13-week moving average adjusted per the company's fundamentals. So a 13-week moving average, that's relatively conservative. Therefore, most of the time you will be out well before that point, but this is like a backup plan just in case you didn't get out before that point. App lost 50% 6 months ago. Why is it prudent? Because it has good fundamentals. That's why, Mike. And even the best stocks can go down, or they have bad periods. Disney's had bad periods. Disney's a great stock. I don't think anybody would disagree with that one. Apple's had some lulls for a while. Tesla had some lulls for a while. I don't think anybody would disagree that those are bad stocks. Sometimes they take breathers. That's the way of the markets. And that's no exception to apps right now. So apps has strong fundamentals, but as always, RT is an important factor. Timing is an important factor. So therefore, during that 6-month period where you saw it pulling back, you're most likely going to be putting your money into something else. It's going to be making money at the time. And once apps starts turning around, if you like the stock, then you start getting back into it. So that's how you utilize the VectorVest analysis, and make sure you're not just sitting there holding on to a stock as it continues to go down instead of reallocating your capital into something to continue to grow it. Would a high RT indicate higher risk reward? Great question, Jim. Not necessarily. A high RT means that there's strong momentum behind it. So if you're a short-term trader, RT is going to be a great indicator, especially the higher the RT, the more momentum behind it. But also keep that in mind that, if it's rapidly increasing, going parabolic essentially, what goes up must come down. If it goes up that fast, it can come down that fast as well. So in stocks with a super high RT, let's say, 1.9 to 2.0, that's when you really want to be concerned and make sure you're very nimble with your entries and exits on it. All right. What are good energy stocks we can get into? So go check out Ramen if you're interested in that. We did talk about clean energy stocks a couple of weeks ago. Make sure to go. You can watch our replays over on our YouTube channel or on our Facebook page as well. Apps not today. Stock going down. Apps is up 7% right now. Mikkel's asking, can I explain what undervalued and overvalued is? Yes. So great question there. Coming down here, you'll see a value for the stock. For apps, for example, the value is currently 77.68. Based off all the current fundamental data out there and all the current earnings reports and all the information you can possibly find, this is what the stock should be worth. Now, if we look at the price, we compare the price of the stock to its value. So if the price is at, 77, stock's trading at 89, the stock is the price currently is over its value. Therefore, the stock is overvalued. Doesn't mean it's a bad thing. It just means that you need to be a little bit more cautious with that play, kind of throwing up like a cautionary red or yellow light here. Because stocks that are overvalued can still go up and can still make you money, but just know that you're paying a premium for the stock at the time. A great way of describing overvalued stocks is comparing it to a Ferrari, for example. let's say it costs $250,000 to buy that Ferrari. Well, does that mean that it takes $250,000 worth of product to go into it to make that car there? No. What that means is that, people are willing to pay that price for that $250,000 price tag, so that way they can say they own a Ferrari, or they can have that name to them. Same thing here. If you're invested in a stock that's done well but shows bad timing, is that a recommendation to pull out or reallocate for the time being? Ahmad, it depends on your goal with that stock. If you're a long-term buy and hold style of investor, if it pays a dividend, those are all things you need to take into consideration. For a prudent investor, you're typically looking at more swing trading stocks, not, buy and hold style stocks. So therefore, yes, timing is of the essence. And if you have a good profit in it, you don't want to give all that profit back. So with that being said, whenever you get into a stock, you should always have a plan of when you're going to be getting out, whether it be a certain criteria of a percent gain, percent loss, trailing stop, whatever it may be. You always want to have a plan in place. And we say it time and time again, plan your trade and trade your plan. Yeah, Risen, I'm staying away from touching that topic here today. All right, so hopefully that helps answer your question. Also, we do have a lot of great videos that we've done over the last few months, specifically talking about knowing when to take your profits, knowing when you should start, or how to set up your profit targets and your plan. So definitely go take a look at those when you have some time. They should definitely help you get, more of a systematic approach to it, rather than just an emotional approach of, oh, this looks good today, so I'm going to go ahead and buy it. And maybe not. This looks bad, so I'm going to sell it. Maybe I'll get out. That is not the type of trading you want to do. VectorVest has shown, that's why we've been around for over 30 plus years, that systematic trading, non-emotional trading, has a lot higher of a success rate than emotional trading. So, take a look at some of those videos. They should definitely help you, get a good start on developing a plan to follow and helping you become more systematic in your investing to help remove that emotional aspect out of it. Appreciate that, Patrick. All right. So that's apps. Let's go ahead and move to the next one. Oh, stayed too long on this one. Let's go ahead and close out of here. Pull it back up. There we go. So something with my internet, I'm starting to get an idea, but something with my internet, it times out if I stay on a screen too long with this iPad. I don't know exactly what's going on to cause that, but hey, we're at least moving in the right direction, working on trying to figure out how to get that going. How do I get the desktop version of my desktop? I've been using mobile for the last 6 months. So Chan, if you have the mobile, or if you have the desktop subscription, all you would do is just go to VectorVest.com/VectorVest7, and you can download it there. VectorVest.com/install/VectorVest7. That will give you the download link, or take you right to the download page, and you can download it there, or you can just simply give our support a call. They can walk you through it as well. I'm keeping us. There you go. See, Chris has a plan. He's asked himself, are the reasons he purchased it still true today? His answer was yes, so he's still continuing to hold it. There we go. That's exactly what we're talking about here today. All right. So next stock we're looking at is Wire. Not familiar with it, so getting a completely unbiased view, but taking a look at the analysis. Going through the 4 main indicators at the bottom. It has great long-term potential, less risk associated with it, really strong short-term uptrends. So overall, the stock is definitely favorable. Taking a look, the value is at 159. The stock's currently trading at 128. So for all the people asking about overvalued, undervalued, you can still find really good prudent stocks that are undervalued. And that way, if you're worried about that aspect of it, you can take advantage of it here. So this is how you can, pick and choose what stocks you want to. Everybody's different. What I may like, somebody else out there may not like that. So therefore, if you're somebody that wants to make sure you're getting a bargain for your stock, then make sure it's undervalued. And this is how you can do that, just by taking a quick look at the value at the bottom. And you can see it tells you it's undervalued right there. Mikkel's saying, I invested in Encore Wire and I'm very happy on how it's doing. I would want to invest more. Is it stock at the moment overvalued? There's your answer there, Mikkel. VectorVest support is outstanding. Appreciate the good words there, Drew. VST would say buy this today, right? Would you? This stock, if I needed to replace it, if I like the stock, yeah, I don't see why not. All right, let's take a look at the next one. ARCB, great long-term potential, less risk associated with it, really strong short-term momentum. Overall, definitely a favorable play here. Taking a look, the stock is undervalued. Current value is at 122. Another Prudent stock that has a great momentum behind it right now that is still undervalued. See, so you don't have to just settle for what you see at the very top. Do what we like to call cherry pick. This is a great list of stocks that anybody out there who's a prudent investor could go through and find some good candidates that they'd be interested in. So Tesla's been one of the top talked about stocks over the last week or so. Let's go ahead and dive right into the analysis of it. Tesla has great long-term potential. I don't think anybody can disagree with that. Has less risk. Don't think anybody can agree or disagree with that. The stock has been, consistent on its earnings. Really strong momentum. So overall, the stock is definitely a good stock. Now, look at the value. $251.93. Price is trading at about a little over $1,000 a share. So yes, you are paying an extremely high premium to own Tesla. Now, why would one be doing this? Because you're buying it on the expectations of what it's going to do in the future and not buying it based off of the current, PE ratios and that kind of thing right now. Yes, it is overvalued, but does that mean you can't make money in it? No. It just means that, you need to be careful and know that you are paying a premium for that stock at this time. So I see a lot of people still commenting stocks. If you guys want to take a look at specific stocks, make sure to stick around towards the very end. We'll analyze any stock that you want to take a look at. All right, so there's a few prudent ideas. Now, let's go take a look at the conservative plays here. When was the last time you saw a wedge? About 30 minutes ago there, Drew. Actually, even less than that. All right, so looking at more conservative stocks. Once again, these are going to be your more long-term dividend payers, your more consistent, slow and steady stocks. Not a lot of volatility typically. More about capital preservation rather than capital appreciation here. So with HEI coming in at number 1, let's go take a look at it. Looking at the graph, you can see it's pretty much a flat line. Yeah, there's a few ups and downs throughout the last year, but overall, the stock is pretty flat. Looking at the analysis of it, long-term potential, the RV, below 1, tells us that has poor long-term potential. Looking at the RS, the relative safety, this is going to be the most important factor as a conservative investor. So 1.31, really strong fundamentals, so less risk associated with it. Timing at 1.22, definitely not as high as what we were seeing with those prudent stocks, but still moving up nonetheless on a short-term basis. So overall, definitely a good stock. Now, if we come down here, take a look at the dividend information. The dividend is 18 cents annual, so the dividend yield about 10% or a tenth of a percent. Not a great dividend, but hey, still pays a dividend nonetheless. Really looking at the YSG factor, the yield, safety, and growth factor when you're looking at dividends. So just like we had the VST that analyzes the overall stock as a whole, the YSG factor is going to analyze specifically the stock's dividend. It's going to be cast on the scale of 0 to 2, once again, to keep things systematic and keep things on, a consistent approach here. So at 1.16, that is above 1. Therefore, the dividend has good yield, safety, and growth. Mainly focused on the dividend safety at 94. I believe it's on a scaling of 1 to 99. So at 90 or 94, that means the dividend is extremely consistent, very unlikely to ever, get reduced or not get paid. So that's what you're looking for as a dividend investor. Sorry, what was the last stock you mentioned? I think it was Wire, if I'm not mistaken, Ahmad. Or we were just looking at Tesla, one or the other. All right, let's go take a look at the next one. So this is the same one, just a different classification of the shares. So HEI.A. Let's go to the next, Progressive. Once again, poor long-term potential, but solid fundamentals. Looking at the RT, 1.1, just barely meeting that criteria that I personally set for myself of 1.1 or higher, but still in a slight uptrend on a short-term basis. Looking at the equity curve on the 1-year chart or the snapshot there, it is moving sideways. Yeah, there's a little bit more volatility with it, but overall the stock is pretty flat over the last year. And then the overall, so the stock is favorable. Looking at the YSG factor, 0.91, below that level of 1, I'd probably personally pass on this, just my honest opinion. Robert, we'll take a look at that in a little bit. All right. Going to the next one. RDN. Poor long-term potential, no surprise. Conservative stocks are going to typically have that lower RV because your primary focus is that higher RS rating. So 1.27, strong safety or strong fundamentals, less risk involved with it. Timing, slight uptrend. Overall, the stock has been steadily rising actually, but not at an extreme pace. You know, it's a nice, consistent, steady play. So overall, the stock's definitely favorable. Looking at the YSG factor, 1.32, favorable dividend as well. Therefore, definitely going to meet that conservative criteria we're looking for. All right, now, last but not least, we'll take a look at here today, the aggressive stocks. Probably some of my favorite. Anybody's watched some of my YouTube videos or, hung out with us in the Jockey Club, you know I'm more of that aggressive trader, and these are going to be my types of stocks that I typically like to look at. But these are going to be stocks, taking a look at the very first one, that have a high RV rating, but a low RS rating. So great long-term potential, but you are incurring more risk involved with that long-term potential. So these are going to be your more volatile stocks, your momentum plays, those types of stocks. That's going to be what you're going to find in the aggressive category. So SJT, San Juan Basin. Great long-term potential, but does have a little bit more risk involved with it. Look at that timing, 1.97. This thing is skyrocketing, parabolic moves right now. Overall, the stock is definitely favorable. If we come down here, even with that parabolic move, the stock is still undervalued. Looking here, it even pays a dividend. Best of both worlds right there. Going into the graph real fast, let's go zoom out to a 1 month. You can see the kind of moves, let's go 3 months, that this stock can do. You can see it's gone from about, let's call that $4 all the way up to $7.20 in a matter of, 2 months? Not a bad run there whatsoever, but just as fast as it can go up, it can come down. So if you're going to be trading aggressive stocks, I highly recommend you make sure that you're up to date with your candlestick formations, technical analysis, those types of things, to make sure that you're getting out at the right times and jumping in at the right times. Let's go take a look at the next one. Mara, a crypto adjacent stock here, if you will. Good long-term potential, but does have a little bit more risk with it. I don't think anybody could disagree that, anything related to crypto is going to be the safest thing in the world. There's definitely going to be risk involved with that one. Look at the timing though, 1.8, an extremely strong uptrend. So overall, the stock's definitely favorable. You can see bigger swings up and down, but when it moves higher very quickly and can create some great momentum opportunities for you out there. DVAX, somebody was asking about this one earlier. Somebody mentioned this one earlier. DVX, great long-term potential, but does have a little bit more risk associated with it than the average stock out there. Looking at the timing, 1.86, an extremely strong uptrend. So overall, this stock is definitely favorable. Now, if you guys have any questions on what stocks that would fit your specific investment style, because as an instructor here at VectorVest, that is one thing that I deal with quite a lot is, I ask somebody what style or what's your investment sentiment or what's your investment style, and I get the answer a lot of, oh, I'm more speculative to conservative. Yeah, I get that quite a lot. Or I'm aggressively prudent, or I'm aggressively conservative. things of that nature. People don't understand that there's actually a systematic way of analyzing and identifying what your investment style is. Now, if you want to go take a look, we have a whole entire segment we did just a few weeks ago identifying that. I highly recommend to do that. We don't have the time here to do that today, but I highly recommend, if you're interested in figuring out what your investment style is, signing up, or if you're not already on the trial or on this VectorVest platform, sign up for the 2-week trial down in the link in the description below. Create your watch list and then identify what your average is of RV and RS, and that will help identify what category of stocks you need to be sticking with. I've seen it happen quite a lot where people, are buying really aggressive stocks, but they classify themselves as more of a conservative investor, and they put really wide conservative stops on a play that can move, 30-40% in a matter of a week or two. If your stops don't match up with the types of stocks you're trading, you don't have a plan that is consistent, and that is an easy way to lose money in the market. And so you want to make sure that, your plan is consistent with your goals. If you're a prudent investor, you want to make sure you're buying prudent stocks. You want to make sure you're applying prudent stop criteria for those. And you want to make sure you're using a prudent timing mechanism to be getting in and out. So, make sure that your plan is consistent with what your goals are. All right, so DVAX, great momentum, definitely favorable, really good long-term potential. But once again, to get that long-term potential does have a little bit more risk associated with it. Taking a look, stock is still undervalued at this stage, even at $19 a share. SM, right now, good long-term potential, but does have more risk associated with it. It's in a really strong short-term uptrend. Even with the pullback here today, it's been on a tear, so no surprise seeing a little bit of profit taking occurring right now. Overall, good stock, and once again, undervalued. So no matter whether you're somebody that's looking for, if you're somebody that's focused on overvalued, undervalued, you can still find a lot of great opportunities that are still undervalued, especially in these markets when markets are at all-time highs. There are still undervalued options available for you if you're somebody who, wants to make sure you're getting a bargain and not overpaying for your stocks. All right. Taking a look at the next one, BRY, Berry Corp, good long-term potential, but does have more risk associated with it, no surprise. Timing at 1.93, really strong short-term uptrend. Overall, stock's definitely favorable for that aggressive style of investor. So before we jump into the fan favorite, if you guys have enjoyed today's session, if you guys have learned something throughout the session here today, make sure, smash that like button, share this video out with all your friends, all your family. Let's continue to grow this awesome community that we built here over the last couple of years. And that's the easiest way to help me out and help this community continue to grow, is by hitting that like button, sharing this with all your friends and family. And if you're over on a YouTube channel, hitting that subscribe button as well. So that way you stay up to date and get notified every time we have more of these sessions here. All right, so with that, let's go ahead and start to analyze your own stocks. If you guys have stocks you want to take a look at, make sure to put them down into the comments or into the chat, and we'll go ahead and start analyzing those. Why do some investing analysts treat talking about altcoins like Shiba like talking about politics? Snoopy's probably because there's a strong social media presence, and if people are buying it up and people don't really believe in it, there's a strong following that's gonna have some bad kickbacks to it. So rather just simply stay away from it, especially because VectorVest doesn't even track cryptos. So I'm just gonna leave it at that. We don't track cryptos. I don't know why other analysts wouldn't talk about it, but we don't track cryptos, so therefore I don't have any information to go off of. It'd only just be personal opinion and conjecture, so I'm just gonna stay away from that one. All right, so the very first one, hey Jim, appreciate that. Jim's coming in with the super chat, the $5 super chat. Thank you very much, Jim, for all your support. Thank you, thank you, thank you. Everybody, show Jim some love. I appreciate that. Hopefully you're doing well. And once again, Jim, thank you for tuning in here today. Glad to have you here. All right, so looking up the very first one, DWAC, somebody asked about it earlier. We'll go ahead and take a look at it. So this one, poor long-term potential, a lot of risk associated with it. Don't think anybody can disagree with that. Looking at the timing, 1.22, even after the crazy moves that it's had, it still has a short-term uptrend. Overall, the stock's not favorable. The uptrend it has is not enough to offset the amount of risk involved with this specific stock. So therefore, going to be passing on this one. Let's see. Let's go head over here. UPST. Poor long-term potential. A lot of risk associated, or more risk associated with it. Timing still hasn't an uptrend, so it's a speculative play at $325 a share. That's going to be a pass for me, but overall the stock is favorable. But if you ask the analysts who pumped this up on CNBC, it was a couple of weeks ago, they have no idea what the stock does. But hey, the stock's going up nonetheless. All right, take that for what you will. BMY. Great long-term potential. A little bit more risk associated with it, though. You're in a steady decline, so right now is not the time to be long in it. Overall, still a good stock because of that long-term potential, but just not the right timing for it. All right, let's go see here. I know a lot of people have been asking about Ford. So Ford, great long-term or good long-term potential, but does have a little bit more risk associated with it. You're in a steady, consistent uptrend, so overall, the stock is definitely favorable here. PLUG, poor long-term potential, a lot of risk associated with it. You're in a really strong short-term uptrend, momentum play right now. Overall, the stock's favorable. This is a speculative play, but it does have that momentum factor, which makes it favorable for right now. APO, good long-term potential, less risk associated with it. You're in a really strong uptrend on a short-term basis. Overall, the stock is definitely favorable. So Nils, it's interesting that you brought up Apollo. One of the videos I did over on YouTube just a few days ago, SDIG, Stronghold Digital Mining, a lot of their board members come from Apollo. So it's interesting that you pull this one up here today. But yeah, overall, the stock's definitely favorable. And talking about SDIG, Jay's coming in with it, SDIG. So SDIG, it IPO'd last Wednesday, so it's a little over a week old. So obviously there's not a lot of data to go off of. So the fundamental analysis are going to be extremely low. It's going to be a speculative play. Any new IPO is always going to be a speculative play. But this one, poor long-term potential, a lot of risk associated with it. The timing though, 1.36, it is in a nice steady uptrend. Overall, not enough to offset the amount of risk involved with it. So the stock is not favorable for right now. But if we can we can see more momentum coming in behind it, we could definitely see that stock become favorable. But it's an interesting play. I like this stock personally. I own this stock personally. And so far, I'm pretty happy with it, to be honest. All right, let's see. HRI, great long-term potential, less risk associated with it. You have a really strong short-term uptrend, so overall, stock's definitely favorable. LCID. Let's see here. Oh, Ninja's coming in with a $5 super chat. Appreciate that, Ninja. Thank you. Thank you once again for tuning in here today. Thank you for being here. I greatly appreciate that. Awesome. Thank you. Everybody over in chat, over on our YouTube page, show Ninja some love as well. That's greatly appreciated. Thank you for being here. And once again, we couldn't do this without you guys. So thank you. All right. So looking at Lucid. Lucid is a speculative play. Poor long-term potential, a lot of risk associated with it, but look at that timing. 1.85, an extremely strong short-term uptrend. Overall, that makes the stock favorable. Stock's up 22% right now. So no surprise seeing that RT at such extreme highs right now. Let's see, RIOT. Riot, good long-term potential, but does have a lot of risk associated with it. You're in a steady decline, however, so therefore, the timing is not right with this one. Has good potential, good stock, just not the right time to be in it. Let's see what else we have. RGR. RGR, great long-term potential, but does have a little bit more risk than the average stock out there. It is in a steady decline right now. Overall, good stock, just not the right time to be long in it. Hey, Patrick's coming in with his stars over on Facebook. Thank you very much, Patrick. Glad you're here. Everybody in Facebook chat, show Patrick some love. I appreciate that there. Thank you, thank you, thank you. It's not necessary, but, you know, it always is appreciated, and I do appreciate all the support from you guys out there. Thank you once again. Everybody over on Facebook, show him some love. Appreciate that, Patrick. Definitely love the name as well. All right, let's see what else we have. MXL. MXL, great long-term potential, less risk associated with this stock. You have a really strong short-term uptrend, so overall, stock's definitely favorable. Prudent stock up almost 16% here today. Definitely a good play right now. Let's see. UCTT. UCTT has great long-term potential, has less risk associated with it. Really nice, strong uptrend. Overall, stock's definitely favorable. Does your website do any suggestions on options since you have the course? Lindsay, our website, no. We do have one of the most sophisticated options tools out there called the Options Pro software that would allow you to do that. So if you're interested in it, just simply give our support a call. They can tell you more about it. But if you're an options trader, the Options Pro tool is phenomenal. I use it quite a lot, actually. All right, let's see. Apple APPL. Apple. Good long-term potential, less risk associated with it. Really nice or steady uptrend. Not really nice uptrend, but steady uptrend, meeting the bare minimums of 1.1 or higher. Overall, favorable stock. SOL. SOL. Good long-term potential, but does have a lot of risk associated with that long-term potential. Really strong short-term uptrend. So overall, stock's still favorable right now. BE. BE, poor long-term potential, a lot of risk associated with it. So it's a speculative momentum play though. Look at that RT. RT at 1.9 tells us an extremely strong short-term uptrend. So if you're a momentum trader, yeah, this is definitely one you're probably keeping your eye on. If it's not, then you're probably going to pass on it. Let's see, BLDR. BLDR. Good long-term potential, less risk associated with it, nice steady uptrend. Overall, definitely a great play. CLF. CLF, great long-term potential, but does have a little bit of risk associated with it. Nice steady uptrend, so it's a more aggressive play, but you know, good long-term potential, nice steady uptrend. Overall, definitely favorable. I'm learning a lot. Appreciate that, Patrick. I'm glad you're here with us. And hey, you know, feel free to join us every single week. Also, for anybody who's not familiar with it, another senior instructor, Glenn Tompkins, does something over, well, actually now he does it, he dual streams now, both on Facebook and YouTube, where he does Trending Thursdays. It comes on at 2 p.m. Eastern today. So if you're interested in learning about, you know, momentum plays, what's really driving markets, hot topic items, make sure to tune in for that. He does a phenomenal job with that as well. All right, SAH. SAH, great long-term potential, a little bit less risk associated with it. However, the timing at 0.93, it is in a slight decline currently. It's a great stock, just not favorable right now. Just not the right time to be long in it. Infrastructure plays, what about them? Costco, sure. So Costco, great or good long-term potential, solid fundamentals, so less risk associated with it. Nice steady uptrend, not, you know, a crazy momentum play, but smooth and consistent. So overall, definitely a good stock or a favorable stock. Let's see, CEI. CEI, poor long-term potential, a lot of risk associated with it. It's in a steady free fall. Overall, definitely not favorable here. ODFL. ODFL, great long-term potential, less risk associated with it. Really strong short-term uptrend. Overall, definitely a great stock right now. Extra off. We'll take a look at extra off for you, Jay. As always, we got to do it at least once a day or at least once every session, right? All right, looking at extra off. Poor long-term potential, a lot of risk associated with it. You are in a slight decline. However, that has been slowly picking up if you've been paying attention to it the last couple of weeks. Overall, not favorable. Hey, Snoopy, coming in with the 99 stars there. Appreciate that, Snoopy. Thank you very much. Thank you all for all your support. Thank you all for tuning in here today. To be completely honest, I couldn't do this without you guys. The community that we've built over the last few years is the reason I continue to do this. I love getting to interact with you guys. So thank you, everyone, for all the continued support and all the donations here today. Was not expecting today to go like this. So appreciate that, guys. Thank you. All right, everybody over on our Facebook chat, show Snoopy some love as well. Thank you. All right, where was I? Lost my place there. Cash, C-A-S-H, Cash. Great long-term potential, less risk associated with it. However, the timing is just not there. At 0.92, it is in a steady decline. Great stock, just not the right time to be long in it. Hey, Mikkel's coming in with the 99 stars. Thank you, guys. Thank you. I truly greatly appreciate that. Thank you, Mikkel. Hey, everybody, show him some love there. Appreciate that. Thank you. All right, so let's go to the next one. Let's see what we have here. AMC, all right? AMC, poor long-term potential, a lot of risk. It is in a steady decline right now. Overall, the stock is not favorable. Now, this is one of the popular meme stocks. So let's talk about this a little bit. RV, RS, both below 1. Tells us this is a speculative play. I don't think anybody could disagree with that. People are speculating on what's going on in the market structure side of things more so than the stock itself. The fundamentals don't necessarily back up a $35 price point right now. So therefore it is speculation. Also, we've gone from our highs of what was it, like $72, I believe, on AMC to where it's trading at 35. So it's gone down about 50% from its highs over the last 6 months. So no surprise seeing that RT below the level of 1 right now. Therefore, for the time being, it is not favorable. All right. But once again, as I mentioned earlier, just because a stock is not favorable, you have to ask yourself, if you're somebody following along with the speculation side of things, you have to ask yourself, are the reasons you purchased that stock still true today? If the answer is yes, then you may continue to hold. If the answer is no, then you need to make some changes. So keep that in mind as well when you look at some of these speculative meme stocks. I don't like calling them that. I like calling them heavy manipulated stocks. We'll call them that for right now. All right, SM. SM has great long-term potential, but does have a little bit more risk associated with it. You're in a really strong short-term uptrend, so overall the stock's definitely favorable here. Let's see, LIDR. Hey, we just put out that video last night about it. LIDR was a great trade we had yesterday. 2 days ago in the Jockey Club. We made 21% in about 11 minutes with 5 minutes of it being halted. Turns out there was an analyst upgrade on it that we couldn't find in the news, but hey, made a really great trade really fast there. This is going to be more of a speculative stock. Poor long-term potential, a lot of risk. It is in a steady decline. We had a great one-day momentum play. Take your money where you can. So overall, stock is not favorable. Whoa, man. Jay's coming in with a $25 super chat. Thank you there, Jay. Appreciate that. Thank you. Once again, thank you for all your continued support. Everybody, show Jay some love. I don't think I've ever gotten a $25 super chat. So Jay is our new highest donor right now. Thank you, Jay. Thank you for all the continued support. Love having you here every week. All right. Let's see what else we got. SPWR. Poor long-term potential, a lot of risk associated with it. So it's a speculative play. No surprise there. You have a really strong short-term uptrend. So overall, the stock is definitely favorable right now. It's a momentum play. If you're somebody who trades off momentum, this may be an opportunity for you. If you're not somebody who trades off momentum, you're not a day trader, very, very aggressive short-term swing trader, you'll probably go ahead and pass on this one. Let's see, BBIG. So another Wall Street bet stock. Poor long-term potential, a lot of risk associated with it. You're in a really sharp decline. Overall, stock is not favorable here. SV, and I don't think I've ever seen that one. SVNDY. There we go. All right, we'll take a look. Good long-term potential, but does have a little bit more risk associated with it. You're in a slight decline right now, so timing is really not not in favor of this stock right now. Overall, because of that, stock is not favorable currently. Let's see. Apple earnings tonight. Hey, if you're somebody who likes, rolling the dice on earnings plays, Apple has earnings tonight. There you go. Let's see. Where was I? TRIT. TRIT has poor long-term potential, a lot of risk associated with it, but really strong short-term momentum. So speculative momentum play here. Therefore, the stock is favorable if you're a momentum trader. Let's see what else we have. LNG. There we go. Great long-term potential, less risk associated with it. Nice steady uptrend. Overall, the stock's definitely favorable. All right, we got two more here today. SCHW. Great long-term potential, less risk associated with this stock. Really consistent, steady short-term uptrend. So overall, the stock is definitely favorable. And then last but not least, PKI. Good long-term potential, less risk associated with it, but price action on the short-term basis is flat. We need to see that price action start picking back up to really tell us, okay, now we should start feeling comfortable getting into it. If you're already into it at a level of 1.01, the stock is moving sideways, so therefore, you may be tightening up your stops. You don't want to necessarily jump out too early without confirmation that the stock's really starting to, reverse course here. But you may be tightening up your stops at this point, making sure that if it does continue to move lower, you lock that profit in and you have more money to put into that next play to continue to grow your cash. All right. So with that, let's go ahead. Take a look at the overview. Right now, we're still one tick into the green. The market is mildly bullish. Therefore, VectorVest advocates caution still when buying stocks at this time. Do you do suggestions of your favorites right now? Michael, not really, because everybody's different. What I like, somebody else out there may not like. And if I like an aggressive stock and somebody conservative hears me say, oh, he likes this stock, so I'm going to go buy it, and it doesn't really match their investment sentiment, then they're not going to trade it the same way. And there's a lot to it that I don't like doing that. If you follow along with the YouTube videos I do, if you follow along in our Jockey Club, our weekly sessions here, you can pretty much get a good idea of what stocks I like and what stocks I don't. But I don't give personal recommendations out there. I just follow the VectorVest analysis. Yeah, I'll give my own 2 cents every now and then, but because I understand there's so many different styles of investors out there, I don't really like to give out, recommendations or say, hey, buy this stock, because it may not fit everybody's needs. So that's my response to that one. All right, so we are one tick into the green. Market is mildly bullish. Looking at the color guard here, buy to sell ratio pulling back a little bit. So therefore, we want to take a look at the advanced declines. Still sitting at 63% of stocks moving higher and 27% of stocks moving lower. Getting closer to that 2-to-1, the verge of less than that 2-to-1 rate that we're looking for. But right now, if I'm doing my math right, still over that 2-to-1 bias right now. So therefore, still showing strength in the market. Still showing if you need to be buying a stock today may be a good idea to be buying one because you have the odds in your favor. Hey, no problem. Welcome. Glad you're here today, Michael. Thank you for tuning in. Overall, looking at the major indices, the Dow is up about 0.5%. The NASDAQ is really leading the markets higher, up 1.2%. S&P's up about 0.9%, same as the VectorVest Composite. So the VectorVest Composite up just slightly from where we first started here today, but not really any major change. NASDAQ really being the main leader in the market so far. Probably due to, the tech stocks, Tesla, Facebook, Apple, Netflix, all those. So that's what we're seeing here holding the markets up right now. All right, so once again, thank you all for tuning in here today. Once again, thank you, Patrick, coming in with the stars, Snoopy with the stars, Mikkel with the stars as well. Over on YouTube, thank you, Jay. Thank you, Jim. Thank you guys all for tuning in here. Thank you for your continued support. As always, if you want to, make sure to smash that like button, share this with all your friends, share this with all your family, so that way we can continue to grow this amazing community we built over the last couple of years. So until next Thursday, actually, take care, be safe out there, manage your portfolios accordingly, and we'll see you guys all next week. Have a great weekend, everybody.